Hi, this is Romeo Caparasso, and I'm just looking ahead. It's now March 2019. Just looking ahead to the upcoming budget, which will be in May 2019. And given that there's an upcoming federal election and there's been a recent Royal Commission, it's certainly been a time of rapid changes. I've found out some of the likely changes that may occur in the May 2019 budget, and just letting you know that these things may happen and they may affect you, and you may see that there may be some things you may want to do earlier than they come in, or not. That's up to you particularly if they affect you, but they're interesting also to ponder. And of course there's no guarantee these will occur. This is just what the leading accounting professional bodies are anticipating may be happening. One of the major changes that may occur is the removal of negative gearing to property, except on newly built ones. So that's already been underway a little bit, but now we're looking. There's been a tax to the depreciation of existing dwellings, but you could still negatively gear, which means you could still claim the interest. But there may be changes in terms of limiting negative gearing to only newly built residential property. While the date's unknown, you could see this as an indicator of getting in before you lose the tax benefits if you wanted to buy an established dwelling and a non-new one. So that's something to consider for you. One of the changes may be the halving of the capital gains discount from 50% to 25% for individuals. So if this comes in May and they say it's from, for instance, 1st of July, but maybe even the year after, it may give you a short time frame to consider whether or not going ahead with realising a capital gain on an asset is worth doing faster than maybe putting it off a little bit longer. So if you were already considering maybe realising, maybe selling an investment property, and you knew there was a certain amount of capital gain on it and taxes on that, you may want to do this faster, because they are saying that they're going to reduce the capital gain discount. So if you've owned it for more than 1 year, they're going to reduce the discount on the capital gain income from 50% to only 25%. So that's something to consider. Now, a very controversial one, and one I'm not of course a fan of, because I'm a share owner myself, and I've got a lot of clients who own shares, is the denial of refunds in respect to excess share imputation credits. So whether you're in a self-managed super fund or an individual investor and you've got share imputation credits, they're going to slash those away from your refund. So I think it's an awful idea. It undermines the great way that the current Australian tax system ensures there's no double taxation of company profits, both in the hands of the investor and also the company. And I think it's very unfair on retirees who own shares, which are losing a tax credit that they've always claimed and used to claiming. And it'll be pretty unfair, and reducing the retirees' income further if this occurs. And also in general, it's unfair on investors. And once again, the Australian tax system seems to be non-promoting people being savers and investors. Okay, and finally, usually there is a change to tax brackets in all budgets, but yeah, they're looking at increasing the top end tax brackets, reinstating the 2% extra budget levy tax rate, and also budget may change Medicare levy increases. So they're talking about going up to 2.5% Medicare levy percentage, and in addition to that, maybe Medicare levy surcharges if you don't have your hospital cover. And finally, let's just want to ponder, if the Labor government comes in, where will all the coalition's current policy on tax reform, and they've got long-term tax reform, small business packages and tax reforms in place, and they've, I guess the whole economy has, taken them on board and started to head aligned to those new policies, and where those policies are going to go. if these are not going to continue and will be redirected by the new government, that's going to be an interesting question, and how that will impact the economy will be quite interesting. Okay, well, thanks for that. I'm Romeo Caparasa from Tax Accounting Adelaide. Hope you've enjoyed my commentary on some potential budget changes in May 2019. You can visit our website at taxaccountingadelaide.com. Thank you.